Hey everybody, what's up? It's Booksy. Today is Tuesday, April 25th, and this is going to be the final macro update. And when I say final macro update, you might be like, wait a minute, you've been doing macro updates for a while. And some of those things that I did for the macro, meaning the big picture, some of them came about, others did not. And on the whole, I would say that the things that I've learned doing that macro structure as we've gone along have been absolutely irreplaceable. There are things that, if you guys remember the mother of all charts or father of all charts, these are things that gave me new ways of looking at the stock, new ways of looking at the stock market, new ways of looking at algorithmic trading. But one thing always remained the same, and that was this tiny little fractal that I identified in December of 2021, which at this point is a long time ago. And this little fractal that I studied became what I would say is like a bedrock for my understanding of this kind of newer algorithmic market price action. When I was originally trading, and this is a very short aside, but when I was originally trading, it was over 12, 13 years ago now. There just didn't seem to be this kind of mechanical nature to many of the stocks in the market. I mean, there's always been obviously supply and demand. There's always been systems of trading that have been more or less repeatable and effective. And the reason that they're repeatable and effective is because patterns exist, right? Because accumulation looks a certain way, distribution looks a certain way. Stocks move on sine waves. Stocks have a setup, right? Like setup structures such as wedges and head and shoulders and all these other things. And when we come back 10 years later, for myself personally, almost 10 years later, right? It was like 8.5 years for me. It just looked different. There was something about it that just felt very, well, computerized. You start seeing that these patterns are existing on all different time frames. And what I noticed is that the nature of these patterns is that they're fractal-like. And the word fractal literally is it's a thing that's made up of the same thing. So it's a shape or a pattern that's made up of the exact same shapes or patterns. When a lot of people look at fractals, they think about them as these static structures that are devoid of volume, that exist on one particular time frame only. And that's not the way that I think about them. I've been doing it for a while now. I've been looking at it for a while now. And I still have people that tell me, that'll come and say, well, so-and-so says this, and it works really well. And that's great. I don't have any problem with other people using different methodology for fractals. And the reason I'm pointing this out right this second, right at the beginning, is because this is kind of it for me. There's not much else to it. I've gone through this master fractal many different times in many different ways, and I do it pretty much all the time on stream. And the main thing that needs to be said about it is very simple. It's very simple. You could look at this, you could analyze the patterns, you could analyze the structure, but the biggest thing about this is that you have within this a fractal-like structure, right? So again, this structure repeats. So as you shrink it, you can see it's still matching the structure. And as you shrink it, you'll see it still matches the structure. And this is why you get to these really noisy areas and you suddenly realize, hey, that looks like that little cat here with the paw, right? And it's like, oh, well, every top looks kind of like that. And as you go forward and you start thinking about these things, what you stop asking, well, what's the pattern? Well, we know what the pattern is. It's distribution and then accumulation and then distribution and accumulation and then distribution and accumulation and then distribution, right? And then accumulation and then it leaves. Why does it leave? What changes? Well, the main thing that you're going to get from all of this is that A, right? Everything happens on sine waves. B, all of these tops, they all basically look pretty much the same. They might have some variance to them. Obviously, they're not going to be identical, but they all are distributive tops, right? And so eventually they're going to break down. And then all the bottoms likewise all have a very similar pattern. I did a bottoms video on AMC. There's really only two basic bottoms that you see on this stock. And the bottoms look just like the top looks. It looks like an M-shaped pattern, just like the bigger picture looks. And then the top looks just like an M-shaped pattern, just like the bigger picture looks. And it's all the same. The difference is whether or not you're accumulating or distributing. And then ultimately, like, why? Why? Why is this happening? Why does this M shape even happen? And the straightforward answer is it's pretty simple, right? You have price resistance, and they're using sine waves to push up and define that price resistance. They're going down for liquidity, usually, right? So that they can buy, and then they're pressing above it, and then eventually they're going to find support on that. Once that used to be resistance, now it's support, and then they can leave. And when you start looking at it that way, it's not magic. It's nothing complicated. They're all the same, right? So this is once again pushing up, defining it, and then look, it's the same exact thing that we just said happened here. And so as we're going forward, I've been sort of coming back to this over and over and over again. And it gets to this point where I think there's this idea that it's suddenly going to change. Like, it's no longer valid, right? And a lot of the questions that I've been getting lately, especially today, have been, all right, what's changed? Surely something has to have changed, right? You had this idea that we were going to have this rotational symmetry and that it's basically ending very soon. We're talking about the 27th through perhaps May 5th, because that's earnings. And that was always like the window. The original date that I had was May 3rd. And I didn't know when earnings exactly would be at that time. And then I came up with the 27th because I did the math for it. And I'm talking about a particular chart. I'm not going to bring it up right now, but it's basically a very large rotation that's occurring on the macro. And it ends. And so you would expect there to be kind of a finishing point. And we've been talking about it. And we've been talking about how we've experienced this bottom area, right? And when you look at the big picture, it's not that difficult. Again, it's not a very complicated concept, right? You're really just combing through liquidity. You can even see it right here, that S-curve shape, right? That's being presented. And that rotation, right? You start on the top of this channel, you end up on the bottom of this channel. And there is a timing to it, and it is basically over, you know? And really what I'm saying is that we've essentially done this part right here in the beginning. We've done the bottom area right here, the big bottom area. And then we're doing like, again, like the final sequencing, but this time it's down here. And that has to do with like how this particular shape appears on an S-curve. And you might say, well, wait a minute. You just told me that it was this sine wave, right? And it's jumping over and finding support and all this other stuff. But I don't see that here. Well, you're not looking in the right places if you don't see it. If you pay attention, you can tell that this is kind of like your main cross. There's the M shape right there. It pushed up and defined where that was, and then it jumps over, right? And then eventually finds support. Now, what's scary to a lot of people is, well, where does it go? When does it stop? It has to stop eventually, right? It can't go all the way down here, can it? Well, the answer is it could, but we have to kind of look at other ways to determine where it might stop. And that's kind of where I'm at right now. It's like, well, look, at this point, I've kind of provided everybody with a blueprint, and there's not really much else to it. Like, you have the S-curve, you have the rotational symmetry, you've got all that stuff. And you could do the measurements. You can take as best you can take like a rectangle, and you can measure from here to here, and you could apply that over here, and you could say, well, maybe it's going to be over here, right, on May 19th. Or, and that makes sense. You could do that. You could also not include that push period, or that downward period, and you could just include this top, in which case you might say, well, maybe it's like right now, maybe it's already happening, maybe it already got to where it was going to get to, and that was the bottom. And the point is that, again, the rotational symmetry that I found, that math equation, it falls kind of right in between those two measurements. And It is in that pocket. It's in this pocket of like April 27th through about May 3rd. And that's coming up very quickly. And so the idea is, could you possibly have timed this massive run if the rotation is actually finished? And to answer that question, what I've done is I went back to the basics. Because while I love the idea that it's that simple, like I just draw a rotation and it works magically, boom, that date comes around and we just run, the news is hitting. Oh, we got 60 more days, or oh, we got this many more days. I mean, it just seems like there's delay after delay after delay. How do we know when this is finished? Well, what's being accomplished here is a really important thing to consider. What's being accomplished in this particular sequencing, no matter what's happening, is you're always going to be jumping over some kind of an important creek. You're always going to be establishing new support. You're always going to be satisfying the liquidity as you're moving along. That means that you're grabbing shares along the way. Institutional operators, they want to explore every single price level that they can. And I've made a case in other videos, again, that this is kind of a gigantic unwinding. If you look at the whole market, and you especially look at the RSI on like every single stock, including like SPY, everything looks like a giant unwinding from the run that it started on the COVID drop. Like everything looks like almost an inverse. Now, I'm not saying price action is 1-to-1. I'm saying go look at like the RSI. It looks like a gigantic head and shoulder sequence, you know? And if you go look at SPY, it's the same way. It's like everything kind of has this starting point back here, and it looks like it's kind of coming into a final unwinding. And that would tell me what? Well, it would tell me that we're probably experiencing a much larger wave, right? And at the end of the day, if you're thinking about, again, the same things we just talked about, then what would we be doing right here? Well, just like we talked about over here, we would be establishing what? A new support and a new whatever, you know, our new resistance here at a new top. And then if you're looking at the previous top, it's like, well, where was the previous one? It was right there. This is no different than what we're experiencing on the super macro. And the only real question that we have to ask is like, well, where does that end? You know, where do we finally get to the end? And if the end has already happened, and a lot of people think that that 380 hit was the end, even though we still went down lower, you know, maybe it was a double tap, because they're using wicks and stuff, other people might come in here and look at just the average trend and say, you know, I really don't think it's over. I think it's going to come a little bit lower. And there's a lot of hit points in there too. All of these are valid ways of looking at the same idea, which is that you have this resistance, you created a sine wave, and then you're whipping around, you're coming back down to check it again. And if it checks out, just like here, you're going to take off. There's a P&F target, which is point and figure for this particular move, and it's already at $15+. So all that needs to happen, all that's necessary for this kind of a move is that we bounce and break out. And ultimately, what you really want to see happen is you want to leave, like you want to extend the creek. Like you want to go past where the creek is. And the creek is just price resistance. It's not that complex. It's right here, right? And if we have a price resistance, right, every time there's like a new high made or whatever, we have a price resistance right here. It's being pressed down, you know, and there's different ways of illustrating this. Once it breaks out, you're going to see movement. And then you're going to see movement again when it breaks out of major trends. So these are things that are super basic that need to be just kind of, we need to remind ourselves of this. And this is why I'm saying I don't think I'm going to do another macro video. I think this is kind of it. If this doesn't bounce here and it passes through this creek, it's game over. It just is. In order for us to have a run, it's very simple. We really need to hold this area. And like if we hold this area down to about $3, we should be fine. It doesn't matter whether we hit 320 or 315 or 350, or if that weird after hours 370 or 364 or whatever it was, whether that was the spring or not, it makes no difference. So when I put that into context, a lot of people will ask me things like, well, what, don't you think this is all changed and this and that? And I'm kind of like, no, It hasn't changed until it's changed, and there's really nothing else to it. It's not meant to necessarily be hyper predictive, although it would be nice, right? What we're seeing is just creek crosses. Resistance right here, go back for liquidity, spring, come back down, check again on that resistance, now it's support, and then you do it again. It just so happens all of these are basically like parallel jumps, and you could just move parallels along. Well, guess what? The same is true for the rising creeks, these red guys. And the one thing that hasn't happened is once we've tested it, right, and established it and then made a new low and tried to retest it, we've never broken out of it. So it almost doesn't matter to me. I mean, this thing could run to $6, but if it rejected at $6 and started making new lows and it rejects, guess what? It's probably going to come back down and retest the area that we didn't retest. So once again, it's a lot like what happened over here. If you leave and you don't check it on the way out thoroughly, it's going to come back down and check it. This is the game of the short operator. This is how they're walking the stock down. This is the sine waves that you're seeing. You're seeing the same exact things that I'm showing over here. And if you're wondering, well, like, why you didn't draw those red lines? Well, guess what? They're right there. They're not hidden. Like they're all here. You see the same thing applied on the top as you do on the bottom. It's pretty straightforward. It's just a series of sine waves. Bottoms, and tops point to bottoms and tops. Like that's the way sine waves are. And in that regard, it's fairly straightforward. And that's why when I got to this area, and my expectation was, I'm sorry, I keep clicking away from it. My expectation was, this is going to look like this. It's going to look like this. It's going to look like this. You know what I mean? Like each one of those is going to look basically the same. Because again, remember, you can take this whole wave right here and then just take it and shrink it down. And it works. And it works because, again, like it's iterative. That's what fractals are. They're within themselves the same patterns you find. So when I look at something like this, it makes perfect sense to me that you could take this image right here and quite literally do almost the exact same thing that I just did, by like taking this and then again, it doesn't matter if it's like 1-to-1, but just taking this same concept and applying it to itself. And it's like, yeah, it's still doing the same thing. So what needs to happen here? What needs to happen is as we're shrinking, right, we need to see a change of character. We need to see volume profiles change. We need to see it start doing things that it didn't do before. And already we've had a very mild change of character, though it wasn't the greatest. We had a mild change of character, which is that this came pretty low, here, and then it came back up pretty high. We're sitting right now on a level, right? That's pretty high. We're almost to this area, which I would say is like the 50% marker. The reason I'm saying it's 50%, it's 50% of, not this move, but it's 50% of this move right here. And I just moved it, so it's hard for me to like, I said that, now it's like not 50%. This marker right here, it was where we bunted our head up. That's why I knew we were probably going to hit 575, because it's a 50% retrace. And that's why I'd called out 575. I'm still not drawing it right. It's like right there. And then we did the same thing back here. It's not surprisingly, right? We did the exact same thing back here. When we dropped through, we came back up 50%. So we dropped through here, we came back up 50%. Well, in this particular case, right, this whole section, this whole area right there that we created lines up with the previous bottom, and then it goes back and it almost lines up with this bottom way back yonder. And in this case, when we go back, guess what? It's pretty much the same thing. Pretty much. The difference is what? Well, it just barely went below. So it's already like not as far down as it was before. But again, we got to take into consideration the fact that this is here, what's being developed. And I think that it's straightforward from that point on. And that's why I'm not really concerned necessarily about rotational symmetry, if it's perfect or not. If it doesn't work, it doesn't work. If it gets to that point and it continues, then it continues. What I do want to know is, when does it change? And the change hasn't quite happened yet. Now, I've had some pushback already here and there. I made a video called Watch Out. I made a video called Be Prepared. And these videos have gotten less and less and less attention, and just viewership and stuff like that. I'm not complaining. I'm saying that it seems to me that when you're bearish about something, when you say, hey man, just be smart about it, and you're not talking about shooting to the moon, people don't want to hear it. But it just summates to something really simple, which is, hey, until this thing changes its tune, it's not changed its tune. Now, right now, almost exactly, this is pointing towards May 3rd, these major creeks that were created. And May 3rd is where we have earnings. And, well, earnings is around the 5th, right? But I'm saying, like, that's right around the period we have earnings. It also happens to be, like, the bottom of this sine wave. So historically speaking, where are we in all this? Well, look, I'm doing the best I can. And you could do whatever you want to do with this. You don't have to believe it. You can go look at it yourself. But look, when you get to about halfway down the wave, and this is after your quote-unquote March-style move, right, where you've got that initial jump, you get about halfway down that wave, okay? And look at the distance from here to here. You get about halfway. What happens? Well, you flatten out, and this is something that I've called like the cat ear, like number 2 or whatever. And it may seem like it's arbitrary. It may seem like it's not really there. But I want you to take a look at these two right quick. Let me just kind of shrink this one for just a second. And I want you to notice what's going on here. Look at this S-curve going around. Look at where it's finding, again, it's bumping up. This should sound very familiar to you because it's quite literally the same thing that we've been talking about, right? It's doing the M cross. It's just, okay, it found resistance. Now it needs to jump across. But in this case, when it jumps, it doesn't do higher highs. It just goes sideways across, and then it comes down. And that's your S-curve. So the middle of the S-curve ends up being this little M-looking thing, and I've called it cat ears with a paw, and I've called it other things. Well, guess what? The same thing is present on this one. It does the same exact thing. And when it jumps, it has a pretty steep reaction right here. This was a big day. I don't pretend to think that it's the same exact thing as everything we've experienced over here, but it was a pretty large move to the upside after that drop, and then immediately it went the other way and dropped again, right? So this is a little bit steeper looking than what we experienced over here, but in theory, it's the exact same move. And it comes down and makes a new low. After it's had this kind of bouncing spring, it pumps up, goes about 50% here, and then pumps up the rest of the way to the top of the channel. The same thing applied here. Jumped the creek, went up to the top of the channel, came back down, went beneath the channel, and then slowly accumulates and works its way upward. This is another M cross, although this one's kind of weird. This is where we had the diamond bottom, if you recall. A lot of people were trying to chart that same kind of diamond in this area. And eventually it jumped over the creek right there, July 7th, and it started having those bigger moves when it started expanding and moving upward. This one's different. It made the M shape early, jumped over, came back down, and guess what? It did what we were thinking it would do, although it was very weird. You know what I mean? It was very weird, you know? It went across it, jumped, came back, and pushed up. And this one has a very different look to it, but it's the same thing. And I knew when it was starting to form these head and shoulders on the way up here, and I couldn't catch it quickly enough, but I was able to at least say, hey, you know, I think we're going to go to like 850 and then come back, that it was going to do that. It did what we did here, which is it creates these head and shoulders and then comes outward and finishes them. Well, we're now in the last section. It means that it's essentially starting over. And there's nothing else to it. Like, it's just going to keep doing the same thing until it doesn't. So the answer here is that I would love to continue to do macro videos on like rotational symmetry and all kinds of cool theories and ideas. But the truth is this simple. It's just the same thing. It's no different. This is just getting smaller and smaller and smaller, just like we would expect it to. And yes, I do believe that on certain time frames, we're basically like right there. You know what I mean? I think on the super macro, we've been there. I think on the macro, we're there. I think on the micro, we're getting there. You know, it's like, but as it's expanding, time is like relative, right? So as it keeps going, it just depends on the size that you're currently in. And you might say, well, Booksy, don't you think this could be like the whole thing? Like, remember how low this came? Maybe it broke beneath there, so therefore it could be the whole thing. Sure, it could be. It could be that small. And I was making a point about this on the Discord earlier. It doesn't matter if you scale it because it will work. Because again, every one of these crosses is the same because they're fractals. So they're gonna be the same no matter how you scale it. So I could shrink this down and say with confidence that maybe it's actually really small. But then the natural kind of like response to that would be, well, then is this a change of character? Well, I don't know yet. It hasn't come back above what I would consider to be like the halfway point, and even if it pumped up here, it's entirely possible it could still come back down. So it's a really tough one to say yay or nay on. Technically, what happens here is it drops below this red line. So does it really matter? No, but that's the funny thing about iterations. It wouldn't matter if you thought it was this, because you would still have the expectation this is going to come down to this pocket region right here. Why? Well, because it's the same exact thing. You know what I mean? Like, it makes no difference whether you analyze the left side only or the right side only or the whole thing, because they're made up of the same parts. So like it's a bit of a brain twist, right? And it makes you kind of step back and go like, well, I don't really know if I want to even do this because it's sort of pointless. You feel like you're just going to go in circles. Well, it is and it isn't, right? It is if you think that the answer has to be that you have to figure it out. Like, you have to know exactly when that moment is, so you don't miss out. And if you miss out, it's going to be the end of the world and all this other stuff. Look, it's not going to be the end of the world, okay? At worst, you could wait for it to jump over this red line and get in at $6. At worst, it could hit the top at $7 and then come back down. You have a stop loss in place and you're fine. You know what I mean? Or you could just be accumulating shares and just get ready to go. So right now, the bottom here looks good. The volume looks pretty good. It looks different. It's not exactly the same. This is very high up. If we look at this supposed like middle area, it's very high. And it's good. That's a good sign. That's a bullish sign. So it's not all like doom and gloom, like, oh great, it's going to keep going forever. That's what Booksy said. No. It's actually pretty good because it gives you a way of understanding like, hey, it's going to keep doing the same thing until it doesn't. So I can be patient and just say, you know what, it's bearish until it isn't. And when I get to the point where it changes, it should be evident. It should be evident. Now, there's already some indication of some change here. So one of the things that looks a little different is notice that we're already on like what I think is that 50% line right now. I'm kind of trying to recenter it, which means this is that cat ear. This is that pump right here that occurs. Look how flat it is. We're not like way down low. Each of these was down pretty low. Now this one was way down. This was at like the bottom of the channel. This one's like, it's not at the bottom of the channel, and it was above where this bottom was. So is there hope? Is there a possibility? Sure, there's a possibility. Also a possibility this continues to slide down, and it does so at kind of more of a snail speed than we're used to, but it would still be like now until when? Well, probably before you get to the bottom here, right? You see that most of these, when they're coming down in the sine wave, they're actually hitting low earlier. So it would actually be probably by like April 28th or May 1st. Well, Booksy, what if it goes up more and it just stays up here? Then it's a change of character, in my opinion. Or it's at least, at the very least, it's a possibility that, again, maybe we're already beyond it and it's not going to break back down again. But this is all you need to watch. Now, you don't have this chart, I know, but look, do the comparison. Take a snapshot of this if you want. Go back, look at it again later, and just see what's going on. Because the next move, in my opinion, that I'm expecting is a downward kind of move within the next few days, going into next week. a downward move. We have 1 week basically of a downward move to get to those low areas down here near 375 down to 350. If that doesn't happen and it does something different, okay, maybe it's a change of character. Maybe it's time to start really loading up. You know what I mean? Like, you should already have been considering those things, because it's, you know, if you're not doing like YOLOing, you know, you should be fine at this point. We're all really low. Like, we're really low. This is a great place to kind of accumulate if you want to accumulate. You know, if that's what you think is going to happen, if you think the stock's going to go up, accumulate, you know? And how does APE kind of work with all that? Well, the short answer is I don't really know. I think APE is going to largely be tied to the hip with AMC. And I think that because, again, this is my rotational symmetry chart, or excuse me, this is my deviation, average deviation of AMC to APE to the baseline, which is the market weighted average. Notice that today we closed it at 1.86. Guess what? We started at 1.86. You want to know where else we closed at 1.86? Right on March 14th. Every time we come to these like critical dates, you know, even right around here, we were kind of like passing through right during the FOMC stuff. We come to these critical moments, it tends to just kind of come back to center. And notice that each time it's doing this, it's a wave. And it's getting smaller, but just like on the other stock, this isn't even like a price path. This is basically like the comparison path. And on this example, you're seeing that shrinking that we've been talking about, and it's getting smaller as it goes. And what's crazy is that I don't even think that it is like going to be like, oh, they're going to be in sync. I think they're like legitimately just kind of doing the same thing over and over to pump the price up and down and get the stock where they want it to go. What I mean is like get the arbitrage where they want it, like back and forth between. It's just like a rinse and repeat, essentially, which is weird. So the general premise here is that as AMC runs, APE tends to be flat or down. Each of these runs, AMC has been flat or down. And then as AMC comes down, usually until about the midpoint, which is right around now, AMC then drops. This has happened both times. APE bottoms, AMC drops, and then we start it all over again. And then because that happens, the deviation comes closer to zero. So it goes down. Well, that hasn't changed yet, and thus so far it's just been kind of, again, gravitating towards that center point, which means that, guess what? They're joined at the hip. I don't think it's going to largely change. Is it possible AMC runs without APE? Sure. It's possible. Does it make sense? Well, the highest deviation they've ever had was $3.75 on average away from the average, which was when AMC was 9 and APE was 1. So is it possible that AMC could run really far and APE could not run as far and then you have this massive deviation? Sure. Absolutely, it's possible. Could all that happen within 60 days? Sure. But I don't know. You know what I mean? I don't know when that could happen. What you're seeing right here is not that pattern. It's some kind of a buildup, right? Maybe it's going to come to a boiling point and explode. The deviation is going to go off the charts. But right now, it's just consolidating around that 1.86. And they're just whipping it back and forth, meaning they're just doing the same thing over and over again between the two. You know what I mean? That's really as much as I have to say about APE. I think in and of itself, it is a pretty straightforward play right now. You know, this could be a head and shoulder, sure. It's a little bit wide for the shoulder, but it could be, which would cause APE to drop. This could also still find itself some footing right here in this 132. If it has demand, it doesn't have to break the neckline. It could just go back up. You know, I was hoping for the break out of the creek here, this final yellow creek here. It didn't do it. It just had a double flush to the upside and then dropped. So that's that. You know, I'm just kind of waiting on it. I'm not really trying to overanalyze it at this time. I do think a lot of this will be reactions to news, as will AMC. But guess what? The pattern is still there. That has not changed. And again, all you really have to do is just wait for that change. Wait for it to do something that it hasn't done. And specifically, we're talking about making jumps, right, on high volume, which is a good
it's happening right now. You're getting a lot higher volume, potentially long stepping in, right? Making good jumps on higher volume, not doing the same thing it's been doing, right? Which again, this would be like right in the middle of that, we're going to drop period. Well, if we don't want that to happen, then we need to see something else happen. We need to see it maybe hold support. And you can look at local supports for those things. You don't need my help to do that through a macro video. So that's all I've got to say for it right now. I'm going to keep watching and updating as I can, but I'm not going to do like another huge macro outlook video. I think that time has come to say, like, I think I'm done with that for AMC. It's very likely AMC goes to 15. It's very likely if we do get a real proper spring down here that we could eventually see something like a big move to like 23 to 24. Absolutely. I still think it's going to consolidate around 15 before anything else happens, right? And then you could end up with a distribution at that point. You don't know for sure that it's going to accumulate and keep going. But I do think it's going to go back up there. There's a lot of reasons for that. I've talked about them in other videos. I just don't think there's another way to frame this where it's going to be any better. Like this to me, that master fractal, this concept of sine waves, the way in which these patterns work just isn't changing. And until, again, you see that major change in direction, then it's safe to assume in my book that they're pretty much doing the same thing. It's still doing the same thing right now that it has been doing. And yep, that's where we're at. So I hope you guys have a good one. I will be, today's the 25th. I'll be streaming tomorrow. But I digress. Have a good one. And best of luck.